we have an Aussie New Zealand dollar buy bias. Now, on the latest meeting, the RBNZ took a more dovish stance where they cut rates by 25 basis points, and that wasn't necessarily completely expected. There was about 25% pricing not expecting a cut. And they signaled the capacity to start cutting rates moving forward, and they revised their official cash rate projections lower to 4.92% from down from 5.65%. So they took basically a 75 basis points cut to the end of 2024 and to 3.85%, down from 5.14% for 2025. Now, when you see the RBNZ interest rate decisions, you can see their monetary policy statement. They put it up here, their OCR projections. And what this does, and let's just, is they show you where they think rates are going to be moving forward. Now, at the bottom, you've got the May monetary policy statement and then the August monetary policy statement. So they only come every other decision. So what we saw here was the August reading for the end of 2024. We were looking for something that would come in showing 3 interest rate cuts from like the prior reading of 5.65, and there it is, 4.92. Okay, so that's what it's been. So that's down like, 3 interest rate cuts nearly from where it was prior. And the end of 2025, you can see it's down to 3.85, down from 5.14. Yeah, so they don't see interest rates going up anymore. Now, on the fundamental cheat sheet, the New Zealand dollar was neutral because we knew that we were coming to this kind of topping point. The outlook for the New Zealand dollar is now dovish, particularly in relation to the Australian dollar, because you can see they've signaled a peak in rates. And if we take a look at short-term interest rate markets, we can get a sense of that pricing shift as well from the short-term interest rate markets. And you see how short-term interest rate markets, after the decision on the 14th of August, say, yeah, we see lower rates ahead. And you can see lower rates, particularly on the longer end of the curve, right? And a cut is the base case now for the 9th of October decision. So what you can see there is a good example of an interest rate decision that shifts pricing. And that's given the New Zealand dollar a bearish bias. Now, if we take a look at the New Zealand dollar on an index level, you can see that New Zealand dollar has been selling off really since the previous July meeting because they sort of signaled there was potential cuts coming. And then the question is, will they, won't they? And you've seen, if you look at it on a very short term, so if you look at it on a larger time frame, you see break through that trend line, retest, selling off. Okay, all of that makes complete sense. So that's the rationale and the reason for our New Zealand dollar sell bias. And we've got an Aussie dollar buy bias because the RBA are in a completely different situation. They're in the situation where they thought, well, we might need to hike interest rates in their last decision. And they said they don't see a recession coming from Australia. And we've had some pretty decent data out just last night, which was the one thing that was a sort of slight question mark before getting into that Aussie New Zealand dollar long. See, the labour data came in above market's maximum expectation, and the participation rate too has come in above market's maximum expectation. The only slight difficulty was the unemployment rate. If that had come in at like 3.9%, that would have been really ripping higher. But historically, the Australia employment level, that's not to worry because it's at very historically low levels. If I just show you, look, New Zealand, where are we? And if you look at the labour market, look at unemployment rate. You can see, not for New Zealand, I want the other. You'll see it now, right? If you look at this, do you see? We're at these really low levels, historically low levels, some of the lowest levels, 20, 30 plus years. So, you know, it's a strong labour market. So don't, obviously it's slightly weaker than expected, but it's nothing to worry about. So all of that means that there is an Aussie New Zealand dollar buy bias. You look at the yield spread 1 year, that's a good interest rate difference. Look, it's pushing higher. And again, the 10s as well, trending higher still. Okay. So one's pulling a little bit higher than the 10s, but both of them trending higher. The yield spread gives us a good buy on dips. Now, a couple of options. We've got now option number one, pull back. Pull back to this area, 1.100 is suitable for buying today. Pull back there, stops can be placed just underneath this recent 109.65 region. Pull back, buying opportunity stops underneath that low, absolutely fine. There's also a buy on stop scenario. And if you look here, you see you've got this bullish engulfing bar. Do you see you've got bullish, and you see the way it pushes back and above that resistance level. Now, if you look at this resistance level, I'll give you a little tip with it, right? Now, you see you've got 1, 2 touches. Now, the close is absolutely crucial for a technical move higher. We need to see a break of this level and a close above. Now, you've got to get really spot on with this. Do you see that's the potential trend line? Those 2 peaks is good enough. Now, if we close literally just above that line on the daily chart, that opens that level up, right, for a retest up to that 1.100, 1.150 region, right? So you got to get break and close. If this closes underneath, okay, I'd still be happy to buy, but I'd want to buy from a deeper pullback, and my stops will be underneath this hammer reversal, and that maybe even the entry on that hammer reversal here at that 1.0960, but that's another thing. But if we close above this area, then we can look to buy on stops below that 1.0904 and look for a run up to 1.100, 1.112, something up here, right, just underneath that R2 pivot. For now, let me just check which pivot that is. Okay, let's see if there's a weekly pivot. That might be. Just check. Yeah, okay. So a week. So it's about this, it's basically on that big round number, the weekly pivot. So that would be the target. Just going to leave that there for now. Okay. So for today, intraday, right, there's also a buy and stop, because if this level holds, and obviously a break above those highs of yesterday will be enough to see, most likely further upside, right? So if we go above 1.1043, so buy on stop 1.1043, right? And stops running under 10965. Okay, that is okay for a target up to the 1111 for today. Okay. The buy bias is clear, and you can see the one, that this wants to go higher. And technically, it's now trying to have it's having a technical battle at this level. If it doesn't break that level, it's likely to start building for a later breakup. So it becomes an attractive buy on dips, but but it would be more attractive to buy down on this dip, maybe this test of this hammer reversal bar. Okay. So that's the logic and the rationale for, let's go for the Aussie New Zealand dollar upside bias. Okay. And we'll be monitoring this for buyers. But we've got an Aussie New Zealand dollar buy bias for the rest of this week. UK GDP was a non-event. There was nothing there. Now, looking ahead on the calendar, there is the US initial jobless claims data coming up alongside US retail sales. Now, this is a bit tricky because I could see the market here's what you could look for. If this jobs data is really strong, so if this comes in below 223 and this comes in below 1.84, I would expect that to support stocks higher because they should be relieved that the labor market is okay. But I was reflecting on this. I'm thinking we had the weak non-farm payroll and the market freaked out. We then had the ISM services print coming in, fine. We've had the latest CPI print yesterday coming in, fine. We had the last jobless data coming in last week, fine. Okay. So there could be a point where the market just gets tired, and it's difficult to know when the market gets tired of that. But the fact that this is released alongside the retail sales data at 1:30 means it could be very choppy and confusing to trade. But what you want to see is you want to see a positive retail sales print, and you want to see a positive initial jobless claims print, and that should give you a buy bias in the S&P 500. But I wouldn't be entering in at market. I would be just looking for dip buying opportunities. Okay. So it's more advanced. So for more advanced traders, you can look for that. Is it a no-brainer trade? No, not quite, because normally this jobless data isn't that important. It's become more important since we had that big non-farm payroll miss at the start of the month that caused markets to freak out, you see? And then we had the jobs list, the job data on, where is it? Here. Do you see on that Thursday, the 8th of August, our markets really, oh, it's not a disaster. And that allows stocks to rally. Okay. So if you just take a look here on the 8th of August, right, do you see that large rally in stocks? So technically, you see, we're heading up into this big resistance area. 1, 2, 3. Is a little short-term opportunity up in there potentially. If we break out through that area, look for a breakout retest. But it's tricky. Paul asks a question on silver. Yeah. Yeah, I'll come to that, Paul, in a minute. Good question. Right. Right. So okay, nicely. Gold silver ratio rising up there quite nicely. With the yields pushing lower, dollar pushing lower, that should be supportive for gold. So if we just take a look at yields in the dollar, you can see real yields are pushing lower, the dollar's pushing lower, that's supporting gold. So that should also support silver. So is there a broad buy bias for silver at the moment? Yes. Right. You've got the gold silver ratio elevated up towards that 90 region. So the last time the gold silver ratio was up here, you saw we had that. Remember that, Paul, you were looking at that trend line break, weren't you? Well done. You're like the king of silver, Paul. That's great. And you spotted that high ratio silver break, go with that trend line. You could just do exactly the same again, right? So go with the break of the trend line. That's on the daily chart. So you could just go down to the 4-hour. Right. You got a 4-hour break now. Right. Could enter at market, stops could run just underneath 27.08 and then look to trail your stop higher. The risk with it, Paul, is the jobless data. So if the jobless data comes in a worrying way, so say the retail sales shows a big slowdown, it's choppy, the market doesn't always know how to react to it. But so this is the risk with it. Say you get the jobless data today. This is exactly what to look for here. Say that comes in above 245. So it comes in at 246. And then that comes in above 1.1901. Then markets will start to think, oh no, the labor market is weak. And you have some of those initial fears coming back, and that should support the dollar. Okay, you might see the dollar just moving higher on that. There might be a bit of like worry, and you might see heavy stock selling. The exact reaction could be a bit complicated, but it could weaken silver rapidly. So that's the risk. So what would give you reassurance would be if that's within parameters and the retail sales doses with parameters. Yeah, okay, good. Excellent, you got that. That's the risk. But otherwise, technically, sound. Right. And if you were just like, oh, well, I want to get a bit risky with this, you just at market with stops under 27.61 because your risk reward is quite good. Okay. But yeah, it's all comes down to risk appetite. In fact, let's just make that a bit better here. 2 touches is enough. That's okay. Yeah, you can see it's quite nice. And with the gold silver ratio, again, and again, don't forget this little trick. Look for a break of the gold silver ratio. You see, okay, gold silver ratio is broken. So stay long as it stays underneath that trend line. But the pesky fund. Yeah. Yeah, I know. Yeah, exactly, Paul. Oh yeah. This is nice. Well done. You're making me laugh. All right. Paul, another great question. Paul's question is, look, hey, hang on, we've seen this great outlook for the Aussie New Zealand dollar. I'm in, Giles, why don't we just get in now? Right? Okay. You can get in now, but here's the risk with it. All right. I'm just gonna have a look technically to see if there's not something really, really stunning you're looking at. No. Okay. So technically, you could enter here now. You could just enter at market. And if you entered at market, you got to anchor your stops underneath 10850 or underneath the RBNZ interest rate decision at that 1.0900. Why? It's because if we sort of find some resistance up at that level, what we can easily see is this reaction. Do you see? Okay. So you see, if we fail to break out of that level, what we're going to see most likely technically pull back down to that level. It could be shorter. So it could either be the touch of that. So this is where it'll likely be, right? We're doing probably. So either it's going to come back down to here, which is where our buy opportunity is there. So if we move down there today, we're happy to buy intraday, stops running under 1965. But it could also pull back further, and how do you tell where it's going to go? Back down to here, but it's respecting that trend line. So you could just have your stops under 1.0900. But really to be sort of ultra cautious, you just pop it here underneath that level there. Now, if we break and close above this level, then we're going to see something. Let's get rid of that. We're going to see something different. If we break and close above that level here, then we're likely to see either that, right? If we stay above, because this becomes your platform, and it means you can just run your stops up a bit 10965. But what we're trying to do, Paul, is avoid all that jip and just say we'll buy on stop with a break of this. Because if we break above that level, then this level's most likely to hold. Okay. And if it doesn't, and if it moves up, it's likely to be a hammer reversal bar, and then we'll deal with that at the end of the day. Okay. So what we're trying to do is saying, okay, we can see 2 ways of dealing with this. If we get the pullback, great, we're in at 100. Otherwise, we'll go buy on stop when the momentum's in our favor. And what you're starting to see here is, this is nice. You've got a hammer reverse. You've got a bullish engulfing bar. That 4-hour candle has engulfed 1, 2, 3, for 5 4-hour candles from that RBNZ decision. So that's all the people that were like us that were saying, oh, we like buying the Aussie New Zealand dollar, but we don't like the Aussie Labour data out. What's it going to mean? They've said, great, we're going to buy, happy to buy. And now if that breaks above that level, see, you could have just gone above 1.1036. That's fine. But if we go about 1.1043, we know this high is taken out as well. And then that should clear out any stops. And you've got a clear run up to that R2 and up to that recent high there. So that's yeah, yeah, 970 looks great. 100 looks great. Yeah, I like both of those levels. And the other level that was nice, this is what we're looking for after the RBNZ, was that 19080. You see? So we're looking for that 10980 to buy in from. The reason we couldn't get it is just because, do you see, price moved down to that level 4 o'clock yesterday. So you might have got it for those of you who got in. But then with the employment data, we had to be flat ahead of it. And then look, in the employment data, you got this funny whipsawing kind of action, which you often get around data lower than higher. Okay. So that would have been, a good opportunity for those of around. That was, doable. But we're going to keep on this Aussie New Zealand dollar pair. And if we get a bullish close above this 10, so if we get a bullish close above 1.1020, then it's just go with a break to the high. And what we'd want then is if price moves lower, we'd look for a potential false break of that inside bar structure, either a minor or a complete false break, and just run the stops underneath that 0.850. So that's the outlook. So folks, that is what I'm seeing today. Now in the futures market, let's just have a little look what's on the agenda, right? Now, first of all, little process we want to do, 1 hour chart. Look at the volume area high and low on the chart. So you can see volume area high. Which is up here. Okay, so this is our volume area high, very important area. And this is the volume area high for this week. Okay, and also we have the volume area high from the prior week here as well. So that tells us from last week and this week, we're just sat in an area where price wants to take off from. Okay, you got lots of trapped sellers on this level here, right? We've tried to have a breakout and we've got a pullback now. So first of all, we see if you get a break above that 5492 level, it's likely to go. Okay, so first thing we see, it breaks that 5492 level, likely to go. For now, we're bouncing off the top of this value area high from this week, but we've also got the value area high from the prior week. So we've got a large support area around this kind of region. So we could look for buying or selling opportunities really from a technical perspective. Now, if we look at this on the daily outlook, we can see, look, lovely, we've moved down to this value area high from yesterday. And you can see prices try to find sort of some buyers, some buyers, some buyers. Now, what can we see? We can see a lot of buyers here, and we can see a lot of sellers here. So there were trap sellers from yesterday. Price moved up, bounced, little bounce, moved back again, bounced, and now price is trying to move lower, right? So if it moves lower, then what we're looking for in the New York session is we're looking for buying opportunities, most likely from this volume area low, okay? So with it breaking down through this area, often that's sort of technically saying it wants to move lower. So what we're looking for here is potential buying opportunities from here. And if the jobless data is really, really like good and the retail sales data is good, then look for buying opportunities back off this level. Okay, so price will likely go up here, then look for thing. And now what you want to do, look for trap buyers and sellers. So here, if you just go to the 15-minute chart, you can see, look, you've got there a lot of sellers, and here you've got a lot of sellers. So what you're looking for later on, or any time before that, look, if those sellers get trapped, you see how those sellers got trapped this morning, and you saw price moved up, moved higher, moved higher, moved higher, and then eventually faded off. And you can see that there was sort of the trap sellers from earlier. They were trap sellers. Price moved up and up and up and sold off. Again, those trap sellers were still, those buyers and those sellers, they're still kind of in play because although the sellers moved down there, buyers still held on. Okay, so those buyers from this level could potentially have still been holding on. But when that level broke here, do you see those buyers there? When that 15-minute candle closed below, that was the capitulation of those buyers. And then that's opened the way for a little bit of a technical move lower. So what you want to look for now, and if you're struggling, look on the 15-minute chart, look for these areas where people get stuck. Okay, and look, another area, wait until the market opens for the US. That's when you start to get the volume increasing. And now look at it. You see yesterday, remember what we were saying with that CPI print? Remember what I said? Look for dip buyers in the S&P 500 because the CPI was benign. Yeah, right? It went down, but I was saying dip buyers, right? Look for them. And then you said selling, and you see those? Look at those here. Those sellers got trapped on this bar here, okay? You had another attempt at the sell, okay? And then you had a break, close, and then all those sellers are trapped, and then it goes up from there. So what you can do is go down to the 5-minute chart and then trust what you were looking at. And do you remember yesterday, we were looking at that sort of 5,440 region, okay? And that's exactly where price moved down to. Do you see? We had the 5,440. All the sellers were trapped here, Brian, right? Right the area we were looking to buy from. And we said yesterday, 5,440. Now, right, I've lost my way, but if you have to do a memory and remember that. And then we saw, look, the sellers came in, and you could have, if you were here, Brian, you could have seen it and said, look, you know, at the US Open, okay, so okay, buyers have come in, you got buyers here, and then look here with a close below that, those buyers are now trapped, and those buyers are now trapped. Okay, so those initial buyers have got trapped, so they bailed out. Okay, they're thinking, oh, I don't want to get involved with this, and they're out, they're out, they're out. And then you got sellers dominating, sellers dominating, sellers dominating. First lot of sellers, okay, are they trapped? Price moves up, finds resistance in the volume weighted average price. Okay, moves up, and then those buyers that thought, hooray, this is the reversal, they got trapped, and price slumped down. So all those buyers got out. The shorts piled in, and you got profit taking. And then with all those sellers trapped there, right, we're looking to buy. So price moves up, and there it is. That's the break. That shows the break of those sellers. And then this is the turning point just here. So like some people that you could have bought on this candle and just had your stop underneath 5,453 because that's the break of those trapped sellers, right? And then it just goes up. And then you could have looked at it and said, okay, sellers are in control. Buyers are in control. Sellers haven't been able to take out the buyers. Okay, look at that buy. The seller, yeah, but it hasn't taken out any buyers. Buyers in control, in control, in control, in control. Okay, hang on. Where's the most amount of buyers? They're here. Up, up. No one's been able to challenge the buyers. Still in control, in control. And then you start to see a bit of selling coming in, but those sellers haven't taken out any serious buyers yet. The first lot of buyers are really here. And once those buyers get taken out, then they capitulate. Do you see? And then you get it all over again. Sellers, they get trapped. It's very messy, but eventually price makes its way up. You get sellers trapped again, right? Again, it's quite messy, but the sellers get trapped. Price moves up here and moves up to the end of the session. So what I'd say is just wait to the US Open and use the 5-minute chart, and you can just spot where these high levels are, or just go up to the 15-minute chart and start to say, okay, hang on, you know, where are the big sellers? Where's the big trap? Where's the trap buyers? So you can see here from this morning, like the big sellers were trapped there, and then the heavy selling from last night, they got trapped here. But you know, bear that in mind for later, but really just look at the near-term data. Yeah, so with TradeAway, what you have to do, go to settings, Brian. Right, go to, where is it? API X, hang on. Go to add-ons and then activate your order flow and your free indicators, and that gives you your volume profile. So go to Apex, go to add-ons, and then just click everything that's free, basically. Okay, folks, that is all for now. Look out for that jobless data. You know what to be looking out for. Any other opportunities, I will, of course, update you. Just remember that euro pound trade. Remember we took that yesterday? Remember we said close it out? Yeah, just pulling back now. We had the best opportunity we had was we just hit that R1 from yesterday. We didn't manage to make the second target, to make the first target, but you wouldn't hold that any longer for sure. All right, folks, that's all for now. Very nice to see you all. Yeah, Giovanni. So basically, good data for the E-mini, which is strong jobs and retail sales just within parameters. It's really choppy, retail sales, so don't get too caught up on it, all right? Then look for retracement sellers, or the other thing to look for is this, right? So look out for this particular thing, right? Do you see here you've got those trapped sellers up at that level? See those trapped sellers there? And you see you had sort of a breakout, and you see how these sellers came in, Gio. So it broke out, then these sellers come. So this is the gang that's trying to contradict. This is the sellers trying to come back in and defend that level. So what you want to look for is if that level breaks, which is the high of the day, then look for that to go. And then, so if you get a break and close above this on the hourly chart, just go with it. Yeah, it should move higher, because what the sort of move you're looking for, sort of a nice kind of move is when you see, let me show you where it is. You want to see a move when the sellers get trapped. Okay, so here's an example. You see the sellers, they're trapped. The sellers come back with another attempt. So it's not a surprise that when they give up there, they properly give up. And you see this boost. And you see that over and over again. So let's see. I want to try and see another example. Let's see if I can find a good example. It's sort of like here. Do you see here? You got the sellers trapped, and do you see how there's some big capitulation there? If you go down to the 5-minute chart, what you ideally want to see, you want to see it pull up, and then like a little pullback with the sellers trying to come back in and defend it. And it's when that second group of sellers give in you really see the moves. Just trying to show you where it is. I'm trying to show you a good example. Let's have a look here. So it's kind of like here, you see here, you got that, all those sellers, right? All those sellers, they give in, okay? And you see that becomes a turning point, and that breakout, becomes a very tight stop. But imagine if it just sort of broke out above, then there was another little candle showing like more sellers coming in, trying to defend that. And it's like when they give up, that's when you tend to get that kind of move. That's it. They try but don't make it. And that's the moves that you really want to be in because they're really strong. And they have very little drawdown. Okay. Very little drawdown. It's like this kind of move, and I know these are not, but you got breakout, right? Then you got the pullback with sellers, sellers, sellers. That's the most amount of sellers there. And notice when those sellers give up, it just shoots up when those sellers give up. It's that kind of feel. Um, here's a sort of example. You got sort of buyers coming in, and notice those buyers, they have to give up here, and notice how price moves up, and then you got these buyers here. See that buyer there, and that buyer here. So you see it's broken out. You've got buyers trying to come back in and say, oh no, we can take this higher for the day. We can take this higher for the day. And then when they give up, you see how it tends to fall more aggressively. Yeah. We'll look at it going forward, okay? So going forward, we'll get this down for sure. And you'll just see it all the time then.